If you get your news from social media, here's the problem. You may have seen this on Facebook or Twitter. I saw it posted by House Minority Leader Kevin McCarthy. And if you're hearing this as a podcast, I'm going to read it to you. It's a graphic titled, "How much more does it cost to live in Joe Biden's America?" It shows 1,000 board feet of lumber costing $304 in 2020, now up to $1,500. A gallon of gas was $1.95, now $3.05. A ton of wheat up from $183 to $251. Coal was $39, now $80. And a bushel of corn, just $3.43 a year ago, is now $6.86. This is all the president's fault. Damage he's done in just several months, McCarthy implies. As if before the border closed to Canada, where so much lumber comes from, the Trump administration had not imposed a 20% tariff. It was later lowered to 9% as housing demand soared during a pandemic when other supply chains and labor were interrupted. And it won't get cheaper sooner, with the president of the British Columbia Lumber Trade Council warning, as U.S. producers remain unable to meet domestic demand, the ongoing actions of the industry resulting in these unwarranted tariffs will ultimately further hurt American consumers by adding to their costs. And yes, that gallon of gas sure was cheaper a year ago when suddenly so many of us stayed home. And before that recent ransomware cyber attack shut down the pipeline that moves 45% of what the densely populated East Coast burns, just as perennial seasonal demand was rising, which it would even if Americans who settled for a staycation last year weren't hitting the road this summer. Corn and wheat, they're not the only crops now pricey as restaurants reopen here. China's import demand soars, and weather remains a big factor in crop production. Coal, after last year's slump, natural gas prices surged to the point where gas has become more expensive for energy producers. While Washington's blame game remains selective about fundamental facts and figures, our Uncle Sam has been running the printing press day and night since the shutdown hit. Relief payments were a godsend when life went upside down last year, but is life-changing inflation now inevitable? Let's ask RT Boom Bust co-host Christy I. And Christy, because so much Washington noise is intended to confuse, first things first, define inflation.
Well, inflation is kind of what we said. When we, the customer, have a decline in purchasing powers in our default currency over time. So this basically comes as the general level of prices rise, as you said, gas, food, commodities. As everything becomes more expensive, our $100 won't buy as much as it once did. But on the other hand, tangible assets also rise. So if you hold any sort of stocks, commodities, property, real estate, you would actually be happy because inflation raises the value of your assets. But on the other side of the trade, if you're in the market to buy property or stocks, you'll not be so thrilled. So that's why people don't like holding cash during periods of inflation, as the purchasing power of their dollar gets eroded just sitting there in your bank account. Because given the current levels of interest rates, you're actually losing money by having it just sit there in a bank. But inflation really isn't all that bad. You want the optimum level.
You may as well have it in your mattress. But you're right, we do want a little inflation, right?
Exactly. You do want a certain level of inflation in order to actually promote the economic growth. So the Fed is now targeting about a 2% inflation. So they don't want people to save that much. They actually want to promote spending in order to combat the COVID recovery.
Yeah, during the pandemic, I walked by a penny I saw on the ground, and I felt guilty for the rest of the day. I was just germophobic at the time, but it used to be worth something. Cyber terrorists can spike our gasoline prices. Forces of nature can make food suddenly more expensive. The worldwide pandemic slammed the brakes on supply and demand generally. But all that aside, when interest rates are high, the economy slows and inflation decreases. When interest rates are low, the economy grows and inflation increases. Christy, has the Federal Reserve painted itself into a corner?
Well, yeah, the Fed has pretty much pinned themselves into a corner by insisting that all of this inflation that we're seeing is transitory. Because every single month, the Fed Chair Jerome Powell continues to say that inflation will pick up in the coming months and it'll likely be temporary, but not enough for the Fed to get off the sidelines and alter its record low interest rate policies. So, this messaging is supposed to be a sign of confidence that things are on the right track and that the Fed doesn't need to come in to interfere because there are no foreseeable problems. But there is a problem because Powell's wait and see messaging is clearly not being received well. Because every time the market hears this, bond yields jump and stocks fall, signaling that investors foresee stronger growth and higher inflation in the near future than previously anticipated. So the market is basically expecting that the Fed will have to walk back their words before the end of the year and be forced to raise rates given how the recovery is outpacing expectations. So that message of confidence appears to be lost. But then on the other hand, as the Feds were to then normalize rates, let's not say raise rates, but let's just say normalize them back to what was reasonable. If they were to do that, the market would throw a hissy fit and people would say that the Fed is tightening too soon and strangling the recovery. And it's going to be going back against its word earlier. So it would be viewed as super hawkish and admitting to the fact that the Fed has fallen behind the curve and that this inflation we're feeling is not so transitory at all.
We think in domestic terms and we're talking about the Fed, but isn't this a worldwide phenomenon now?
It really is, because not just in the US, but also in other developed countries, they are recording a jump in median home prices to near all-time highs, many of them selling for more than their listing prices. And also, if you look at in the US as well, the National Rent Report is showing that the average rent has increased by the largest single month increase ever recorded recently. So especially here in the US, when we're looking at stimulus, all the stimulus money has now dried up, and that has resulted in the savings rate plummeting by over 50% in the latest report. So basically, prices are rising at the fastest pace in almost 30 years. Meanwhile, income and wages are either stagnant or plunging. And all of this is supposedly transitory.
Well, nobody likes rising prices except people who are selling things, including labor. Post-pandemic, strong economic growth. Demand is up sharply. The help wanted sign is everywhere. Is this the roaring 20s? Or having printed all that relief money, are we burning the candle at both ends and making people too lazy to go back to work?
I mean, to put it in context, printing all that money is putting it mildly. We printed about $3 trillion last year. And to put that in perspective for people, that's about 1/5 of the total circulating amount of the US dollar since the US dollar was created. So that's quite a lot to print for a single year. And then in terms of labor, companies have now cited labor shortages that have been persisting even with all of this increased incentives to get employees back. So the national unemployment rate is now about 6%, but the labor market is now at a crossroads. There's strong demand for workers, but problems with supply despite a 9.8 million workers sitting on the sidelines. And one of the major things that businesses are pointing at are the enhanced unemployment benefits. So they are now pitting the jobless who say that they're struggling to find work against businesses who are arguing that they're struggling to find employees, because this supplement has now become a major disincentive for lower wage workers. Although there's this high 8 million job openings as of March, some workers are saying that these positions pay too little, they're too far away from them, they can't afford to accept it, or that the positions require skills or certifications they don't have. So these are arguments that you wouldn't have heard if there wasn't a $300 a week federal boost acting as a cushion and allowing these workers to be picky about what to take on. So we're beginning to see that some employees were in a position that they were literally making $4, $5, sometimes $6 an hour more on unemployment insurance with the pandemic bonus. So it doesn't really make sense for them to go back to work anymore.
Well, we are talking inflation with RT Boom Bust host Christy I, and I'm down to about 30 seconds, but I got to tell you, we find silver linings everywhere. I just did a mortgage refi at a rate that was prevailing when LBJ was president. Can you think of any other ways someone watching can brace for inflation?
Well, similar to that, you can also refi your car loan, student debt, consolidate your debt. But other things to look at, as we talked about earlier, are anti-inflationary assets, such as gold, such as Bitcoin, any assets. The point is you don't want to lose more purchasing power than you already are. So it's better to invest in a growing asset than to have it sit in a savings account to get whittled away.
You bet. That Bitcoin is a roller coaster. Christy I, boom bust on RT America. Thank you for stepping into the big picture. Coming up, new rules at Facebook, a new law in Florida, and everyone is still irked at social media. This is the big picture on RT America.